Ladies and gentlemen, good day and welcome to Grasim Industries Limited Q3 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ankit Panchmatia, Head Investor Relations. Thank you, and over to you, sir.
Thanks, Yashashri. Hi, good morning, everyone. Wish everyone on the call happy 2024. Thank you for joining us today to discuss Grasim's third quarter financial results of financial year 2024. The financial statements and presentation are available on the exchanges and as well as on our website. For safe harbor, kindly refer to our cautionary statement highlighted in the last slide of our presentation. Our leadership team is present today on this call to discuss our results. We have with us Mr. S.K. Agarwal, Managing Director, and Mr. Pavan Jain, Chief Financial Officer, Grasim Industries. Also joining the call with me is Mr. Jayant Doble, Business Head of Chemicals, Fashion Yarn and Insulator Business, and Mr. Himanshu Kampania and Mr. Rakshit Hargave, Business Head and CEO of Paints Division. Let me now welcome Mr. Pavan Jain for his opening remarks, post which we will open the floor for Q&A. Over to you, sir.
Good morning, everyone. First and foremost, wishing you all a very happy and prosperous 2024 on behalf of Grasim. It is always a pleasure to be with you for discussing our quarterly results. Looking at reflections, I am happy to share that we have ended 2023 and started 2024 on a satisfactory note across multiple fronts. To start with the latest one, we have successfully completed our rights issue with an oversubscription of nearly 2 times. This reflects the support and belief of all our stakeholders who have and would participate in Grasim's growth journey. Let me now share key developments on the ongoing growth initiatives and projects. We have completed expansion of our specialty chemicals capacity, which is epoxy polymers and curing agents, doubling to 246 KTPA versus 123 KTPA earlier. This would enable us to meet our valued customers' growing demand and further solidify Grasim's foothold in India's growing demand for specialty chemicals. Further, project implementation of world's largest single-site capacity for CPVC resin facility has also commenced in arrangement with Lubrizol at our Vilayat site. We are also progressing in line with regards to our 50,000 tons per annum capacity of ECH, which is expected to be completed by Q4 of next financial year. Post-completion, all these initiatives would improve chlorine integration to around 70% from current level of about 63%. In viscose, we continue with our debottlenecking activities at Nagda, Vilayat and Kharach. The current installed capacity stands at 842,000 tons per annum. Our viscose business is making new strides in the area of sustainability. The business has received first rank in Canopy's 2023 Hot Button Report with a rating of dark green shirt. The business has implemented EU-BAT technology at Kharach, the second plant to achieve this feat. As pioneering circular solutions in fashion industry, the business has made first shipment of its lyocell fiber produced with recycled cotton waste for use in textile value chain, and the response has been very promising with repeat orders. Our paints business has started trial production at 3 plants, which is Ludhiana, Cheyyar and Panipat. Brand architecture under Birla Opus is complete, and we would be launching a full range of products in FY25. Birla Pivot has crossed rupees 120 crore of monthly revenue run rate in December 23. The private label Birla Pivot Tiles is gaining good response and is now launching private label in plywood and doors categories. Moving on, would like to share key global trends having bearing on our different businesses directly or indirectly. Given US economy has entered calendar year 24 on a stronger footing, which reported Q3 CY23 GDP of 3.3% against the estimates of 2%. Federal Reserve in its latest meet left the key policy rate untouched at 5.25 to 5.50%. The US Composite Purchasing Manager Index Output Index has increased to 52.3 this month, the highest level since last June. In contrast, Eurozone and China are facing headwinds in their economies. Eurozone's manufacturing PMI showed that output contracted at a slower pace in January 24 as the index rose to 46.6 from 44.4 in December 23. Two major economies of Eurozone, Germany and France, reported slowdown in pace of growth in the manufacturing activities. China's official manufacturing PMI inched up a tad to 49.2 in January 24 compared to 49 in December 3. In efforts to put support real estate sector that underpins consumption and household wealth, People's Bank of China announced 50 BPS cut, biggest in past 2 years, effective from 5th February 2024. This is expected to inject about 1 trillion yuan in the banking system. Given such developments, IMF has also revised its global growth forecast for 2024 to 3.1% from earlier forecast of 2.9%, with improved outlook for US, China and India. However, the current Red Sea disruptions, which manage about 12 to 15% of world trade, including 30% of container traffic, appears to be adversely impacting the outlook on global trade. Adding to this uncertainty is super election year 24, which would see more than a third of the world population across 60+ countries undergoing national elections. All these uncertainties pose challenges, as also possibly new opportunities in 2024. Switching the context to Indian context, the first advance estimates published by NSO in January 2024 show real GDP to grow by 7.3% in FY24, better than revised growth estimate of multiple agencies like RBI around 7%, IMF forecast of 6.7%. Available high-frequency indicators like IIP, vehicle sales, growth in bank credit, real estate sales, GST collections, etc. appear to support NSO's growth estimates. We at Grasim expect to resemble India's growth story given our presence across sectors. Coming to our financial performance for the quarter under discussion, the consolidated revenue struck at highest level of rupees 31,965 crore, recording growth of 12% YOY. The TTM revenue, trailing 12 months revenue, which is indicative of FY24 revenue, crossed milestone of rupees 1.25 trillion, growing at CAGR of 14% over FY20. Consolidated EBITDA grew by 34% YOY to rupees 5,150 crore. The TTM EBITDA is nearing milestone of rupees 20,000 crore, posting CAGR of over 9% since FY20. Conglomerate structure with diversified businesses has enabled consistent growth in revenue and profitability. Cement and financial services businesses under Ultratech and Aditya Birla Capital are on an accelerated growth journey, fulfilling infrastructure and financial needs of our country. Our standalone performance continues to exhibit stability despite vagaries of global commodity cycles. Both our key businesses at standalone level, viscose and caustic, currently in down cycle, continue to remain profitable. Our established risk management mechanisms and cost leadership enable us to ride global price volatility optimally and deliver industry superior performance. Standalone revenue for the quarter stood at rupees 6,400 crore, recording a growth of 3% YOY. The revenue growth was largely driven by volume growth of 34% in VSF and 5% in caustic soda business. However, the profitability was impacted with global weakness in chemical segment led by oversupplied market and sharp decline in realizations. For simplification, we have made some changes in our results presentation with regard to segmental disclosures. We have combined our textiles, insulators, paints, B2B, e-commerce, adjusted for inter-segment elimination and unallocated income under one head named Other Businesses. Such categorization aligns the disclosure with our published results. Viscose business growth stood strong on YOY basis, partially on the back of markets reverting to normalized levels post exceptionally weak Q3 FY23. Part of VFI volume, which finds its applications in embroidery and georgette and home furnishing, has lower demand pull during the quarter. The realizations were further impacted by cheaper imports from China. The sharp YOY decline in caustic prices appear to bottom out at current levels of about $400 to $450 level. However, the market remains oversupplied due to large capacity additions in FY23. Our paints business, Birla Opus, is on track for launch in current quarter with trial production already on at 3 plants, namely Panipat, Ludhiana and Cheyyar. We have already completed brand architecture under our paints brand Birla Opus. The sub-brands portfolio across multiple categories of luxury, premium and economy segments, and development work for design, package artwork, consumer communication, etc. is complete. The supply chain, logistics and distribution network is also in place to support the launch as stated earlier. We would offer complete range of high performance superior products in the premium, mid-range and mass markets favorably placed across multiple price points. The dealer onboarding has already commenced and you would certainly hear out more from us on this over the calendar year 24. As highlighted in the last quarter, B2B e-commerce business under brand name of Birla Pivot has already crossed monthly revenue run rate of 100 crore. The quarterly revenue run rate is now inching towards 300 crore. Private labels under Birla Pivot Tiles is garnering good response. We have already initiated in-store branding initiatives also, and now widening our coverage for private labels, adding plywood and doors. The geographical front of Birla Pivot has now extended to cover about 20 states. Capex for quarter stood at 1,425 crore with 76% allocation to paints business. We remain on track to achieve planned Capex guidance of about 5,900 crore in FY24. With the existing, we can take the questions.
Okay. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Tejas Shah from Avendus Spark. Please go ahead.
Hi, thanks for the opportunity. Couple of questions on paints. So you spoke about dealer onboarding which has started. Just wanted to know, and if you are in position to share, is there any target that we are running with in terms of dealer onboarding for this year, A? And B, are these dealers existing paint dealers or are we getting new dealers in the ecosystem?
So let me answer this question. So obviously we have targets for dealer onboarding for every month, every quarter. So that goes without saying. And when we are onboarding, to begin with, we are largely onboarding existing paint dealers. but there could be also some who are new to the paint business.
Sure. And second and last question. So you have been very transparent on the expansion plan and also on the status of the expansion that we are doing in paints on the plant side. Just wanted to know any similar update or details you can share on depot network that needs to be created around the plant infra?
So obviously, the depot network goes along with. So we have a aggressive target to set up depots by the end of this financial year. We are already signing agreement and leases, and depots are already operational to take in some of the trial production. And obviously, we also have a target for next financial year. So we are in line with whatever we have set up. As you would have also read in some reports which have come out, is that our objective is to have a pan-India national distribution by the end of financial year. So our network expansion, ambition, and execution is in line with that.
Great. Thanks and all the best for that. And I'll come back in the queue if needed. Thanks.
Thank you.
Thank you. We have our next question from the line of Nirav Jimudia from Anvil Research. Please go ahead.
Yeah. Good morning, sir. Thanks for the opportunity. Sir, I have two questions. So one on VSF and one on chemicals. Sir, based on our presentation, is it safe to conclude that our VSF EBITDA on a quarterly basis, based on a Q1Q numbers, is flat on a per kg basis, and the fall in the numbers is predominantly because of the VFI?
To some extent, your analysis is in line, but also it's very dynamic, so we cannot assume selling price has come down in this quarter, whereas raw material prices have also reduced and volumes have gone up. So there are three levers operating in always in this equation. But yes, overall the VFY was a little bit less in this quarter compared to previous quarters.
So because the fall in profit is close to 62 crores, so 75 to 80% is a safe assumption to take for the fall in the VFI business out of this 62 crores fall?
Yeah, not exactly, no, but yeah, there is VFI has been seeing some demand slowdown in some particular segments as mentioned. Then there is a problem of some cheaper imports from China also. That is also impacting. But the numbers may not be exactly what you are trying to say.
Got it, sir. And sir, if you can just share your view on the premium on the value-added VSF vis-a-vis the grey VSF. So, if you can just share what sort of blended level premiums we used to or we are currently getting on over and above the grey VSF.
So this one ranges. Normally it is about 20% over the grey price.
Okay.
In general. But sometimes it is more depending on which product volume is more, and there are many products in that category.
Yeah. Because sir, earlier we used to share for Excel it was close to 40-50 cents, for Modal it was slightly lesser, and Top Dyed was even lesser. So what is the current broad range if you can share on these three products?
So I think I will not be able to give you that specific product price. But in general, cotton prices have come down, so Excel prices have also come down in line with cotton prices. So has reduced, and in general, China also YSL prices have come down in last full year.
Okay.
But it keeps on changing depending on the mix of products in the VAP basket.
Got it, sir. So second question is on the chemical side. So we have seen a sequential improvement there. So last quarter you mentioned that we had a shutdown at the VAP plant. So this entire improvement is in the profitability could be attributed to the swing in profits from the VAPs, or has some improvement on the cost side happened on the caustic side, and because of which the profitability has improved?
Sanjay Dubey, I will take the question. Maybe I'll also add a bit of color on the VFY discussion. So just going back to your VFY question, look, Our VFY portfolio consists actually of three types of fibers.
Okay.
Spun yarn, continuous spun yarn, and pot spun yarn. And they go in, different segments ultimately in garment. They offer very different properties. Our spool spun and continuous spun segments have been doing quite well. Demand has been maintaining stable. The problem is essentially around the pot spun yarn segment, where certain areas of garments are not picking up or did not have the seasonal pickup that we would normally have seen, which affected that particular quarter's results. And we had one operational disruption at our Kalyan plant. Having said that, we see already, going forward, the situation becoming slightly more normal on the pot spun yarn side.
Okay.
I think, when you look at the drop in the VFY business, remember that it's a portfolio of filament yarns.
Okay.
Some of that portfolio is still doing quite well. It's one specific part of the portfolio and an operational issue that we had in the Kalyan side, which...
Got it, sir. And sir,
question on chemicals. Of course, look, the raw material, the cost side has helped us. Coal prices have gone down, electricity prices have gone down, etc. But what has really helped us on 2-3 areas is, firstly, our utilization. Our utilization, which we have reported at about 88%, we believe is best in the peer group today.
correct.
This quarter. That's of course one big element. Secondly, our specialty part of our chemical business has done better. We have called out the revenue percentages. We don't call out those EBITDA numbers, but that is for sure a part which has done better. And as you correctly pointed out, we had some operational stoppages in one of our chlorine derivative plants, which have not been fully resolved, but production on those chlorine derivatives has been better than before. Some work is still going on. So a combination of factors. A better cost position on coal, power, salt, that's one. For sure, better utilization than our peer group. A much better performance in the specialty part of our portfolio, the material side of it, and somewhat better performance in chlorine.
Got it, sir. And last question, Mr. Dobleji, if you can share your outlook on the epoxy business. So, what's the current industry size in India, and on the liquid epoxy which we manufacture, how much value addition which are currently doing on?
Yeah, so look, I would not want to answer the value addition question very directly. I will answer it indirectly. So, if you look at how typically these epoxy businesses create value, and the epoxy businesses range between, let's say, 8 to 12% in terms of EBITDA sales. We would be in the better quartile, the top quartile of this industry. Okay. We sell our entire capacity out, and we believe that we have high market shares. So we are in the top quartile performer of this epoxy industry. We have basically the larger market share, whether you look at composites, whether you look at coatings, whether you look at corrosion protection. And we have recently expanded our facility. We have announced the openings, where we have gone with a somewhat richer portfolio. So we have now also added products like reactive diluents, polyamide hardeners, polyester hardeners. So we believe that we have the largest and also the biggest specialty portfolio in the Indian market on epoxy resins and hardeners.
Got it, sir. Got it. Thank you so much, sir, and wishing you all the best.
Thank you. Before we take the next question, would like to remind participants to press star and 1 to ask a question. The next question is from the line of Naveen Sahdev from ICICI Securities. Please go ahead.
Yeah. Good morning, and thank you for the opportunity. Also, let me give my best wishes to the entire team Grasim for the upcoming formal launch of the paint business. So, couple of questions on the paints were that if you could just clarify, what is the exact capacity that is coming up for launch? And also then in the same breath, if you could just also give details about how the timelines look for the balance capacity.
Okay. So, like we told earlier, that the total capacity of the 6 manufacturing locations is about 1,332 million liters. Currently, trial production is on at 3 locations, and each of these factories has a capacity of about 200 million liters. One of the factories also has a capacity of 30 million liter of solvent paints. So the 3 factories under trial cumulatively have about 630 million liters of capacity. Obviously, how we utilize it and how it grows is a separate issue. On the second part, your question in terms of how are we planning to roll out. So we will roll out gradually, starting with the north and some areas of south, and gradually we will speed up to roll out nationally in a certain period of time, which would be very, very ambitious. That's how we see the rollout plan, and that's our take on the capacity which is being tried at the moment.
Understood. So in Q4, you will actually see products on the shelf in north and south markets.
Yes, sorry. Go ahead.
Yeah. So we said that when we introduce, we will start with certain areas of North India and certain areas of South India. Your second question about the other plants, we will expectedly start trialing them next financial year in the first quarter, hopefully the next one in the second quarter, and the last one would be probably in the last quarter of next financial year.
Understood. This is helpful. My second question then was about the VSF segment. So we were looking at some VSF pricing points in China, and please correct me if my reading is wrong, but I thought from mid of August or early September is when the prices in China bottomed out, and there has been almost a very handsome 8-10% kind of a recovery in that market. But the presentation that you have shared does not really show any trend of pickup. It's actually more flattish to a marginal declining trend, if I am reading that correctly. Of course, as you mentioned, even the exit is 1% lower than the quarter average. So is there anything that we are missing here in the sense that are the prices you think are unlikely to see have not seen a recovery and hence the outlook remains subdued, or there is some recovery that we can expect? Thank you.
So the VSF prices in China have remained very narrow range bound. So if you see even quarter 3 of last year and quarter 3 of this financial year, there is hardly any change in the prices in China domestic prices. That is one part, and China is the largest producer and consuming country for VSF in the world. But export prices have reduced significantly during this last 12 months. So export prices have come down as much as almost 15% during this year, this 12 months. So that is the picture on. But export is a smaller part for China and most of the producers, because most of the producers sell major part of their output in their domestic markets. Does that answer your query?
Yeah. So just to confirm, you're saying export prices being weak is what impacting the realizations for us. Otherwise, in China, local prices per se, spot prices in China could be on an uptrend, or that's not correct?
So there is no clear distinction. Recently, they posted higher prices, but that was just before the Chinese New Year vacation. So that is their tactic. Every year or every long holiday period, they will post higher prices. But before that, they will conclude the transactions for the holiday period. So those prices are
in a way very nominal, and real impact is seen only after the holidays open again for business. So we should not read too much on the nominated prices. But as of now, the prices are just stable, like not showing any big increase then, except international prices because of Red Sea crisis, the shipping costs have gone up. So to that extent, the producers have adjusted the offers for export prices.
Understood. This is helpful. Thank you so much.
Thank you. We have a next question from the line of Rashi Chopra from Citigroup. Please go ahead.
Thank you. Just on the VSF, before I move on to paints, what on your realizations, was there a decline sequentially?
Yes.
Would you quantify that?
About 2%.
Okay. Thank you. And the loss, we can make out the total loss coming from the paints business and the B2B business, the e-commerce platform. So what was actually the paints contribution to the EBITDA loss in this quarter, the expenses that you capture?
So I think we are not giving the specific numbers for these businesses. Possibly once we start reporting separate segments in next financial year, we will come to know. But as the business is, increasing the size of manpower, etc., the uncapitalized expenses which are being charged to P&L are also increasing. Once the plants complete their trial run, etc., then it will, whatever is being capitalized will also come to P&L. So that is the status. But yeah, quarter on quarter, the losses for paints businesses have increased, as also in B2B business.
Okay. Lastly, on your standalone balance sheet, what is the net debt EBITDA as of now on a standalone basis? And following the rights issue and with the commissioning of the paint plant, etc., where do you expect this to be by by FY25? End of FY25.
So as on 31st December, we have said our net debt to EBITDA is about 1.7. As on 31st December. Post that, we have, of course, received part proceeds of rights issue, that is about 1,000 crore. When we complete our paints capex and other ongoing capex, etc., we have given guidance that our net debt to EBITDA should be about 3 to 3.5 once we complete all the rights issue, etc. But that will all depend upon the performance of the existing businesses as well.
Okay, and just lastly on that, so where do you, for the next few quarters or so, how do you expect the margins to move for both your VSF as well as the chemicals division?
I think the VSF businesses margins are stable. Chemicals is still the realizations are on decline. We feel while globally maybe the prices are bottomed out, but India remains oversupplied. I will request Mr. Jain for this. Yeah, please.
Yes, so if you track chemicals, and I'm sure you track all the chemical industry, a lot of downstream demand actually is driven by agrochem in India. And, sorry, just a sec, there is some disturbance on the line. So a lot of demand is actually driven by agrochem in India. And as you must have noted from the transcripts of many of these agrochem companies which are driving the end demand for basic chemicals, they are projecting that the worst is behind them, right? And if we go by those reports, and I'm sure you guys are following those companies, then correspondingly suppliers like us, who provide caustic, chlorine, etc. into that industry will, of course, follow suit. The other area, of course, is the industrialization in the area of renewables, automotive, etc. continues. So the demand for epoxy resin continues. So I think it's fair to say that we are probably at a situation where we are stable to gently starting to improve.
Sorry, stable to gently starting to improve, you said?
Yeah. But I would strongly encourage you to follow also the larger agrochemical complex here, because those would be a better lead indicators for whatever assumption you want.
Right. All right. Thank you.
Thank you. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, thank you for the chance. My first question is on VSF. You've partly answered, but I mean, overall, so if you see operating rates, inventory in China, all are moving in the right direction, but we don't see a sustainable increase in realizations and margins. So if you could just share what is your outlook on prices and expectation in the next 6-9 months, and can we assume that the margins for our division is kind of at the bottom and we should see some bit of an uptrend there?
I hope you are absolutely right that margins are at the bottom and they will improve, and we also wish for that. And so it is very difficult to predict very precisely or accurately because things are very volatile. But there is no reason to be pessimistic, and we hope that slowly things should start to steadily improve. But that will be very gradual. I don't expect it to be very sharp turnaround.
But I mean, if you look at the operating rates touching 90 and even inventory levels are quite low, in the past, I mean, have you seen these kind of leading towards better profitability and better pricing strength for the industry?
Yes, the operating rate and inventory levels do indicate that the industry profitability should improve, but then sometime this, like Red Sea crisis has suddenly come out of nowhere, and that has affected the entire export trade from China, which is not just VSF but the entire textile, even finished products also. So all these things have a lot of implications on the profitability. So bearing such things, your normal interpretation of high operating rate and low inventory is correct. And within VSF also now lyocell fiber is though from a very low base, but is increasing more rapidly. So there are certain undercurrents from there also.
Understood. And is there any new supply which is getting added, new capacities in any of the regions by a competitor?
Not in the normal VSF side, but on the lyocell side, yes. Some capacities are being added, some have been added, and some are under construction to the extent of about 125,000 tons or so. So, but not new capacity on the traditional VSF side.
Okay, understood. Second question is with respect to chlorine integration levels. There is a good uptrend, gradual one over the years. Is it possible to quantify what sort of benefits we get out of every, say, 1% increase in integration? I mean, just some thumb rule, and what is our target for, say, over the next 2-3 years to increase it to what level?
Yeah, so, you have to look at it in two ways, right? So chlorine sells today in India at negative prices. So the first benefit we get, of course, from chlorine integration is those negative prices are evaporated. These negative prices are in the range of, let's say, 4,000 right now. So that would be one input. And second is, depending upon the chlorine derivative itself, For example, stable bleaching powder will have a different contribution margin percentage, if I take one extreme example, versus, let us say, the chloromethanes would typically have a different contribution margin percentage. So they would also correspondingly have different capex intensity. So it's not a very straightforward question. The first step in chlorine integration is to extinguish the loss of profit which happens through a negative chlorine price. And then subsequently, depending upon the capex intensity and complexity of the molecule, we get different contribution margins for the particular product. But it's we have the largest chlorine derivative portfolio in India, and we continue to grow our chlorine derivative portfolio. For example, you will see that this quarter we are going to be mechanically complete with our monochloroacetic acid plant in the eastern part of India. It's a small plant, but there are not that many manufacturers of monochloroacetic acid. So that will have, of course, a nicer profitability profile than, for example, chlorinated paraffin. So I wish I could give you a simple 1% answer, but it's not really that straightforward. But I think the general rule is chlorine integration is the way to go for us.
Yeah. So you said minus 4,000. So on an average, the derivatives, what would be the realization be?
Yeah, that's a huge diversity of product profiles there, as I mentioned. Right? Everything from stable bleaching powder to chloromethanes. So that realization number will not give you any meaningful insight.
Okay, got it. All right. Thank you and all the best.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. The next question is from the line of Latika Chopra from JP Morgan. Please go ahead. Ms. Latika?
Hi.
Yes, please go ahead.
Hi, can you hear me?
Yes.
Okay, thank you. Thank you for the opportunity. I had, a few questions on your paints foray, and thanks for sharing, a few slides on that in your presentation. The first one was on, I heard your comments on the dealer base rollout. Wanted to check, the cities that you are targeting in north and south to begin with. Would you first focus on the larger cities, or the plan is to go wider, in the next few quarters, even in the smaller towns? That was the first part. And the second bit was, if you could share some thoughts on your advertising plans. You've talked about that advertising concepts have been finalized, but when do we see you, would you wait to roll out whole of your product portfolio, SKU portfolio through the course of FY25, or you would probably likely target the peak summer or the peak festive season, to go all out on the advertising front? Thank you.
Okay. So on the cities where we are going to roll out first, so, I wouldn't want to give exact details, but like we said that we want to roll out fast, so we will probably cover them pretty soon. Obviously, the first attack will be on the bigger cities, bigger towns, but because we have national ambitions to go very fast. So like I was saying, that obviously we will cover the bigger towns first, but very soon we will also go down, down the town straight up. And like I said, that we will start with North India and some parts of South India in this quarter. So you shall see, it's only about 1.5 months left for that. Secondly, on our advertising plan, so we have an all-round 360 plan. We have, we will have below the line, digital, above the line, consumer promotions. All that will start rolling out. And obviously they will follow a sequence. But I don't think that we are trying to focus on the summers or anything like that, because we want to roll out as fast as possible. So our advertising and media spend will follow the distribution, which will keep growing up.
Sure. And, any feedback or, experience of wood finishes that you launched? It is available now in almost 60 cities. Any initial thoughts on, how the product is faring? What are you learning from contractors? workers on this product? How is it placed, versus competition? Any initial thoughts there?
Yes. So obviously it has been a good learning exercise, and the sales team has also got practice of actually working in the market. The feedback is very positive. Firstly, it's only a limited range. So if you take a look at the imported wood finishes that we have launched, we have not launched the full range. The full range will also follow suit. But the feedback from contractors and painters is excellent. The product quality is excellent. The acceptance is very high. And obviously, we've got some learnings in terms of what do we need to adjust for the main launch. So we are taking all that into account.
Sure. And the last bit from my side was, on paints, any thoughts on, how are you looking at, B2B versus B2C? B2C is loud and clear, I guess, but will B2B also be a meaningful part of focus for the company in the initial phase, or?
No. So both B2C and B2B will, start parallel. So the institution business or the project business, as people call in the paints business, is an absolute part of our portfolio. We also have products designed for that, and it will start in tandem with the retail business.
Sure. Thank you so much.
Thank you. We have a next question from the line of Mudit Agarwal from Motilal Oswal Financial Services. Please go ahead.
Hi. Good morning, sir. So my question is related to the tax expense. During the quarter, the tax expense was significantly low. So is there any adjustment, or what would be the run rate going forward?
So, Mudit, the tax for the quarter also had some write back of the provisions in the current quarter. So on overall basis, you can assume that our effective tax rate would be about 14 to 15%. So considering that, whatever adjustment was required has been done in this quarter. Of course, it includes the write back also, a small part which is based on certain cases settled. We have written back that provision. On the annual basis, you can assume the tax rate to be around 14-15%.
Okay. And so the second question is on the chemical business captive power plant capacity. How much is the captive power share as well as the renewable share in the chemical business?
Mudit, can you please mute your line when you're not speaking? There's background noise coming from your line.
So about half of our power is captive. About 14% is renewable, and the rest comes from the grid.
Okay, got it, sir. Thank you.
Thank you. We have a next question from the line of Ronald Sioni from Sharekhan. Please go ahead.
Yeah, good afternoon, sir. I had one question with respect to the insulator business. Can you share the revenues and EBITDA number for insulator business?
No, what is your question? Can you please repeat?
Ronald, please use your handset mode. You're not very clear.
Now I am audible?
Yes.
Yeah, audible. Yeah, please.
So I wanted to ask about the insulator business. Can you share the revenues and EBITDA numbers for insulator business?
You mean the ones we have consolidated now, right?
Right.
You're asking us to deconsolidate again.
So, first of all, I think it is a very small part of standalone itself, and if you look at the consolidated numbers, it is almost negligible. But let me share the number which you are looking at. So revenue for the quarter is about 111 crore in Q3 this year. EBITDA is marginally negative, very small number, -1 crore.
-1 crore. Okay. Thank you very much, sir. And in terms of cotton, viscose and polymer differential, whether it has reduced or it has a correlation with viscose demand or prices also?
Sorry, I didn't understand your question. Can you please repeat?
The differential between the prices of cotton, viscose and polyester. So that spread has reduced, or still there is difference, wide difference between this demand and prices because of this switch?
Reduced during the quarter-on-quarter, and the polyester prices also reduced, and all the fiber prices reduced during the quarter. But viscose prices reduced much less than the reduction in the cotton prices. So this one is a very complex interfiber dynamic of this thing. So, for example, international cotton prices reduced quarter-on-quarter by 4.6%. India prices also reduced by same amount, but Chinese prices reduced much more. On year-on-year basis, international cotton prices reduced by almost 10%. Indian cotton prices reduced by 15%, but China cotton prices increased by 10%. So it all depends on many other factors in addition to simple market dynamics. And but mostly they move in tandem. The extent can be varied, but mostly they move in the same direction. And this quarter the prices had reduced marginally for all the fibers.
Okay. Thank you very much. Thank you very much.
Thank you. We have our next question from the line of Nirav Jimudia from Anvil Research. Please go ahead.
Thanks for the opportunity, sir. Sir, you mentioned that our chlorine realizations were 4 rupees negative this quarter. So what was it last quarter? So whether it has further worsened in Q3 or it was at the similar levels as compared to Q2?
No, compared to Q2 it has worsened by about a couple of thousand rupees. And as I mentioned earlier, it is basically the slow pickup in the agrochem sector which has affected this in a big way. Having said that, I think the chlorine pricing dynamic across the country is quite different. So you get very different dynamics depending upon which region you are.
Correct.
So at the end, it's agrochem and to a certain extent dyes intermediates which drives chlorine pricing in India.
Got it, sir. So the improvement in profitability could be also attributed to our flax business, because I think we have been producing flax out of our lye. So has that helped this quarter in terms of the stable ECU realizations on a sequential basis despite of chlorine worsening sequentially?
Yes, so we are always optimizing between lye and flakes. That is absolutely correct. And we see what is the best way that we can approach the market for maximum input. Similarly, we focus a lot on utilization as well. So you are right. We have been always optimizing between lye and flakes depending upon the price delta between the two forms of cost.
So possible to share the capacity of MCA which we are going to commission very shortly, because you mentioned in one of the discussions that we are...
So small capacity, to be very frank with you. For us it is very important to set this plant up as a demonstration of going further into complex chemistries in our chlor-alkali business. But you can say the capacity, it will be about 7 KT per hour.
Got it, sir. Got it. Sir, out of our pipeline sales, out of our total chlorine integration, like 63%, what would be the contribution through the pipelines? Because earlier we used to share some figures of chlorine going to close to 85,000-86,000 tons on a quarterly basis, but I think that is now stopped. So can you just give some sense in terms of...
pipeline sales is in the range of 12 to 14% depending upon how the customers pick the product.
Okay. And the last question is on the maintenance capex for the chemical business as well as for the VSF business on a yearly run rate basis.
Just a moment.
VSF will be around 350-400 crore rupees.
So, Nirav, see, it will depend upon, you cannot take a standard number for every year.
Yeah.
But roughly you can assume about 300 to 400 crore rupees as maintenance capex for both these businesses, each of these. Each of the business, yeah.
Okay. For each of the businesses.
Yeah. We have number of plants, no locations. We continue to invest in the cost optimization also.
Correct. So, Pawanji, is it possible to share how much through the debottlenecking we'll be adding the capacities on the VSF? I think you mentioned 3 sites where we are currently undergoing a debottlenecking. So, is it possible to share what sort of capacity additions could happen out of this?
Okay, so we have done a small debottlenecking in our lyocell plants during this year. That will take our capacity from 31,000 to 44,000 tons per year.
Okay.
Then a small debottlenecking we have done at our Kharach plant for the VSF also. And then in the course of this quarter as well as coming year, we will be also trying to further improve the productivity at all our VSF plants also. Like the new lines at Vilayat.
Yeah.
More, because the lines have been now running for almost 1.5 years, 2 years. So we are getting better performance slowly.
So some capacity additions could happen there also through debottlenecking.
Without much capex.
Got it, sir. Thank you, sir, and wishing you all the best.
Thank you. We have our next question from the line of Suryansh from BizX Enterprise LLP. Please go ahead.
Yeah, thanks for the opportunity. I was asking, my question was regarding Birla Pivot. So what are our plans there, and are we planning to move into B2C and opening retail fronts, or what are the plans there? Can you answer this one?
So as already spelled out earlier, we are extending the coverage in B2B only across country now, covering almost 20 states. There is no plan of B2C as of now. We are also getting into private labels. So Birla Pivot tiles have been already launched. Plywood and doors are also in the process. We are in the process of launching. That is the status. Hope that answers.
Yeah, thanks. Thanks for my question. Taking my question. Thank you.
Thank you. We have a next question from the line of Lakshmi Narayanan KG from Tunga Investments. Please go ahead.
Thank you. If you are entering into paints, do you see the industry-wide compression in terms of gross margins or operating margins over the next 5 years? Whether the profit pool would actually shrink in terms of percentage?
So, when you say for the next 5 years, it is very difficult to answer. Our objective is to, in a reasonably acceptable short period of time, become the number 2 player and also turn profitable at the earliest possible. So I think if we follow the principles, the answers will lie there.
Would you expand the dealer margins, or would you actually sell at a cheaper price? How do you intend to do this?
So, we are not disclosing anything on our pricing. I think when we launch in the market, you will come to know.
And the launches slated for the next month?
So, we have disclosed that we will launch it in this quarter. So it has to happen either in February or March. Like I said, it's only a question of few weeks.
Got it. Thank you so much.
Thank you.
Thank you. Due to time constraints, this was the last question for today. On behalf of Grasim Industries, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.